Here now is Art Laffer, former Reagan economic advisor. Art, thanks for joining me. So give me your take. Again, we have a potential shutdown in China, maybe affecting the supply chain more. We have rate hikes coming from the Fed tomorrow. What's going to happen with this economy as we look out a year from now? What impact are these things going to have on economic growth?
Well, all you've described, Sean, is Debbie Downer. I mean,
yes.
But when you're looking at this correctly, you're right. I don't see a heck of a lot in this economy that makes me happy or optimistic about the future. The producer's price index at 10% is a very high number. And what you have to remember, Sean, is that number is higher than the consumer price index. And it occurs at an earlier stage. So if you look at the stages of growth in a product going through the process, it means that consumer prices probably will be rising as well to rise up to meet the producer's price index. And, you know, it's not a good outlook there. I don't see any much good outlook in what's happening in Europe. That's not good. In China, the lockdowns, these are all pieces of bad news. At some point, they will change, but I don't think they're going to change anytime soon, Sean.
So, Art, I think the Fed was late to the game. They should have been raising rates far earlier. I can Monday morning quarterback that, right? But now, as you mentioned, CPI at 10%. To land this plane, the Fed, and not kick us into a recession, is that even possible? Are these rate hikes going to lead to a recession for the American economy?
Well, let me, if I can, take you back, way back in time to 1981 when we took office on January 20th. Inflation was running at 15, 16, 17% per annum back then. And Paul Volcker had been named chairman of the Federal Reserve Board by Jimmy Carter. And coming into that time, the prime interest rate when we took office on that day was 20.5%, which was way above the rate of inflation, which was necessary to bring the inflation back down under control. This Fed has done nothing so far to bring inflation down under control. If they were to do that, Sean, they would have to raise the 10-year bond yield to maybe something like, 14, 15% to be able to have a real interest rate there, which has caused people to economize on their money balances. As it is now, they've been printing money galore, and they've done nothing so far. And raising the interest rate a quarter point here or half a point there is not serious. It's just plain not serious when you have inflation running between 7 and 10%. It's just not serious, and they haven't started the task of bringing inflation back under control.
Well, we're talking about interest rates, but also they have to unwind a $9 trillion balance sheet as well, which is going to cause rates to go up as well, which we don't know how that's going to play out. But while that's shocking, 14, 15% rates to get this thing under control, that would have a devastating effect on the economy. I would just note that back in '81, you and Reagan were actually trying to fix the problem. Democrats are actually trying to make the problem worse, so they want to spend more money, build back better. Nancy Pelosi came out and said, listen, everybody, spending's not the problem. Spending's the answer to inflation. I want to get your take on this, because I look at what's happened
to... It's jokeable.
Yeah, go ahead.
It's giggleable. It's just silly. I mean, if you have a demand curve and a supply curve, if you demand more, what happens to the price? It goes up. If you have people wanting to buy more and more things and they have more and more money to do it, you're going to find inflation rising, which is exactly what's happening. It reminds me when she said unemployment benefits, raising unemployment benefits are the best way to stimulate the economy. What? I mean, it just shows an absolute ignorance of economics and just a spouting nonsense, which is very damaging and misleads people. You wonder why people don't trust politicians. That's why.
Well, Art, we laugh at it, but it's depressing that this is where the Speaker of the House is at on economics. I want to get your quick take on this, because as I looked at the impact that the West has had on Russia, we've been able to shut down their economy, destroy their currency. We're going after their oligarchs. I'm talking about that later in the show. What concerns me is that shouldn't America learn a lesson that if you give too much power to someone else, like Russia did to the West, we've given that same kind of power over our economy to China. Shouldn't we be getting American businesses out of China back to the United States, or maybe to India or Vietnam or somewhere else other than China? Isn't that a real threat to our economy and gives too much power to China?
Yeah, but let me, if I can, just say this, Sean.
Sure.
I'm someone who wants less government, not more government. And the more government dictates you must do that, you must do the other, you must do this thing and that, the worse it's going to get for us and for the world. What I would like to see the government do is take a breather, stop spending money, lower tax rates, let the private sector solve the problem. If the private sector wants to produce in China, let them produce in China. Let them get the comparative gains from trade. If we need to have more defense, spend more on the defense budget the way Reagan did, but cut the regular budget and cut the dictates coming out of Congress to businesses and to the private life. I mean, mask mandates, all of those things, they're very counterproductive. I'd like to see less government, not more government instructions on how to behave.
Well, to your point, Art, I think lower taxes and smarter regulation will actually bring businesses back home, no doubt.
Exactly, we need that.
That's not where they're at.
We want to entice them back home, not order them to come back home. We want to make them want to be here, not have to be here, otherwise they get punished.
I don't care where they go.
That's not the type of country we want, Sean.
I don't care where they go. I just don't like them in China. That's my only point, Art, but I know you're a free market guy to the end, and I respect that and love you, and thanks for joining me today on the show.
Thank you, Sean. You're one of my favorites, guy.
Thank you. All right.